All right, so welcome back. Okay, so this is what we last left off was we just finished putting in our employee, right, Katie Reynolds. Okay, I'm going to go ahead and click continue because I can go ahead and enter in my um, my employees later on, right? I can use the employee center to enter in my employees just exactly like how I did with my vendors and my customers, right? It's all the same. But what I did there was showing you how much information that an employee requires for you to be able to fill out and set them up. Okay? So the next section is going to be talking about setting up taxes for your for these individual payroll items, right? Because a lot of them are going to be federal taxes and then a lot of them are going to be state taxes. So we have to set them up so we can properly put them and place them into certain areas so we can be able to make payments to them. Right? So I go ahead and click next and everything looks good. So these are all of the federal taxes. Okay, so there's a lot there. Okay. So there's all the federal taxes, right? I can go ahead and click next because that looks good. And then next here is I need to set up some of my California taxes. So I have to set up my California, disability, my California unemployment, California withholdings, and my California, my California employment, okay? All right, so let's take a look here. So the first one is California disability. Whoa, I'm sorry, excuse me. So right here, California EDD payments, which is the, right here, we're going to look at disability first. So who are we going to make a payment to and how much percentage is it going to be? So let me see. So California, the California here, let me see. We are going to make sure that it is for this one, it says it's supposed to be 1%, okay? And what we're going to do here is we're going to enter in, we're going to be entering in 3.4%. Okay? And it is going to be, right, 3.4%. And I'm going to go ahead and click finish. Okay? So that's to set up the disability. Now, anything else that looks good. So I'm going to go ahead and click finish because these are going to be automatically filled in for you because we already stated that Katie is going to be, or not Katie, but we as a company too, are going to be paying into California tax as well, right? It isn't just based on Katie anymore, right? It's based on where we also have our company doing business in, right? We are doing business in the state of California, right? So next. All right. So then next is going to show up these. Now these ones are going to be your federal taxes as well as your California. So again, federal 940, which is your Medicare and Social, your federal income tax withholdings. Your 41 is your Medicare and Social Security. So let's take a look here. So the first one here is how are you going to make a payment to the first one, which is the federal 940, the federal income tax withholdings. In this case, we are going to make a payment. We're going to make a payment to the EFTPS. Now, what does that mean? That's the Electronic Federal Tax Payment System, okay? So like I mentioned before, right, the easiest way to get money from a company is through electronically, right? EFTs right now are becoming really popular amongst not only the federal, but it is very popular amongst society nowadays, right? Everybody where you go, you have the opportunity to either have your phone carried around with you and you just tap your phone onto the little bar scanner and it will either use Apple Pay, Android Pay, I don't know what that's called, and some kind of way, right? You're able to even use your phone to carry the credit card information on there and use it to scan, and it will electronically, right, transfer the money from your account to the business, right? EFTs are very popular, and the government uses it to collect money. So a great example, right? For a small company like us, for example, right? We only have 2 employees. We might have to pay every so often, but the amount of tax money that we can collect for the government isn't going to be very large, right? Compared to a corporation like Walmart, right? Walmart has almost 1 billion employees, and they have to process paychecks every 2 weeks, right? So that's $1 billion, or even more than that, right? If they pay their employees, right, 1 billion employees, that means they're going to have more than $1 billion of taxes to collect for the government. And the best way to collect it is through electronically, and they can get it instantly from all these major corporations. So that's why it's very important that you do set up this payroll system, just because, again, it makes it that much easier. Instead of writing a check for a couple $100s, right, that can easily get lost in the mail. So in this case, we are going to be using the electronics, so the EFTPS, there it is, right? Which is the Electronics Federal, the Electronic Federal Tax Payment System, okay? And how often are we going to be paying our federal 940? Well, it really depends in this case, because we're a small business. It allows us to either make monthly payments or quarterly payments. So annual or quarterly payments. Now, your best rule of thumb is you shouldn't wait till the very end to save all the money to do this, because you don't ever want to get in trouble where you rack up so much money to the point where you won't have like $10,000 or $15,000 at the end of the year to pay off your federal taxes. So you should try to do it in a meaningful manner. Okay, so in this case, quarterly should be good. Next, so what about your federal 941s? So same thing. You're also going to be using your EFTs here. Okay, wait, hold on. This is... yeah, so your 941s. Let's see. How are you going to set this one up? Okay, so this one, you are going to be using the EFTPS quarterly, and of course, you're going to make a payment to the EFTPS. Okay, what's the account number? There it is. It already has it in for you. 1132456789. Okay, and of course, what is the payroll period? So again, if you're going to make everything quarterly, you should just make everything all the same time. You don't want to make all your federal payments every other month, because then you're going to get too confused. So it's better to just make them all payable all at the same time. So in this case, I'm going to make quarterly payments to my for the federal 941 as well. Okay. So now here we're at California, so we're going to be doing the EDD, right? What's the number here? The account number for the EDD is going to be 1234-45678. Oops, 45678. Okay, that's the account number. And how often are you going to pay? Once again, make it all the same quarterly. Okay, same thing, another EDD for the California withholdings. So 12345678. And once again, we're going to make quarterly payments. In this case, you can only have the option to do quarterly payments. And I finish. Okay, so there you go. I set those all up. Now, in this case, yes, you're going to have to actually set up each and every individual payment plan, obviously, for paying your liabilities. But in this case, they already set it up for you, right? They already set up the EFTPS, and they also already set up the EDD. But before this, you should set them up so then when you do in next week's class pay those liabilities off, yes, it's collecting all the money, but as long as you have that information, you'd be able to go online and be able to access that the internet and be able to make those payments on time. Okay? And then I'm going to click continue. So that is it for all the taxes. So I just went over the federal and the state taxes that we are subject to pay as a company and as well as the employee as well. Okay? Next is going to be your year-to-date payroll information. Now, I'm going to tell you this. This is if you are a pre-existing company and you're switching to use QuickBooks, so therefore you have year-to-date information. But if you're using this for the very first time and you're setting up payroll as of this is the first time you're using payroll in general, then you will not have any year-to-date information. So this book right here is assuming it will tell you that you're going to go ahead and click no, you don't have any year-to-date information. So you're going to skip on forward. So in this case, right, this is assuming that you're setting up your company for the very first time and you've never paid an employee yet. You don't even have any employees on the list. So in this case, that's what the assumption here is, that you do not have any year-to-date information. If you do have year-to-date information, that's pretty straightforward. You'll be able to get that by getting your copy of your W-2 form, okay, from the company, not from the employee. And that should give you all the information there, right, in regards to whatever means that you kept track of your employees' federal taxes and things like that. So all those year-to-date information, such as how many hours they've collected or how much money they've collected from you, all of that's going to be in the pay stubs, or it's going to be automatically in a W-2 form already made already. Okay? So in this case, we're assuming that we are starting without it. So in this case, it says if you paid any employees in 2022, you must enter in the payment and the yada yada, extra, right? So I'm going to go ahead and click continue. So then now it says, okay, for this instance, has your company ever have processed any paychecks in the previous year? So you want to say no. Okay, because then that's going to, if you select yes, then you're going to have to punch in all the year-to-date information here. Okay, so no, you have not issued any paychecks prior to setting up this window, so I can click continue. So then once you've done that, now you are completely done, and it says right here, you're going to finally go to the Payroll Center. Now in this case, so I just set up my entire payroll, right? I set up all the benefits, payments, compensations, and all that stuff, right? And I set up all the taxes. So if I now go ahead and go to my list and go to my payroll items list, now watch this. Look at that. When we started, there was only 6 accounts, right? Now, after I went through the interview, I now have advanced earnings, I have federal withholdings, I have California tax, I have CARES, I have all of these different payroll items that I have put in here. Okay, I even have bonuses, hourly, regular, salary, vacation, salary, regular. I have it all set up. Okay, now that's that's in case you want to use the interview to do that. Now, for any reason, let's say I offer different things now. I want to expand my payroll list. Like I mentioned before, right? You can go through the interview anytime, okay? Even to set up a new account, go for it, right? Because it walks you through it, pretty much walks you through it. But in case you don't want to or you don't need to, right? And you just want to set it up. So for example, I want to set up workers' compensation. So I can go ahead and go here down to payroll item, and I would be able to click new. And I would just walk through this scenario just like this and manually enter in my information one at a time. So first things first, it says, what do you want to use? You want to use the easy setup or you want to use a custom setup? So again, it allows you to do standard settings, and the other one is editing the standard settings. Now in this case, again, if you are new to payroll, you should use the easy setup. Okay, so I'm going to click next. So what is this next item that I'm trying to create? Okay, well in this case, is it a compensation? Is it insurance benefits? Is it going to be a retirement plan? Is it paid time off? Is it other additional or additions, or is it an other deduction? Now in this case, workers' compensation, right, is something that the company pays for. So it's not technically something that you deduct as part of something, right? But it is a company contribution. So we definitely want to select that. All right. And then other one is custom setup. So again, whatever it is, federal, state, and other taxables. Okay, so next. So there you go. Now I'm creating a new account, and it will take me through this to set it up. All right. Now it's asking me, so what? So since this is another contribution, right? It's a company contribution. What are they going to be? So we're going to be actually setting up through this through the another way. If you could do what do you call it? The payroll setup, right? So in this case, it'd be a miscellaneous addition, okay? Or it could be, let's see, cashback, taxable, fringe benefits, mileage reimbursements. It's definitely going to be an other benefit, okay, or an other addition. Okay. Now it's just asking you what are the things entailed with this. So I'm going to click next. So then it does walk you through it, but again, instead of having to go through the troubles to have to go through going back through the interview, right? So here's your payroll items list. So there you go. You create. Did I cancel it? I think I canceled it. So in this case, right, that's what you would do over here, miscellaneous addition. So in this case, all I do is edit this information here. Okay. What do I want to call this? I want to call this workers' compensation. Okay, which is a company contribution. Okay, and again, is this payroll idle inactive? Okay, do I want to track this expense? Okay, by job? No, so I'm going to go ahead and click next. So what does this do? Okay, here's the account, right? What account is this? Is it a payroll expense? No, it's not. It's actually payroll tax expense, employee benefits. It's not really. I would just leave it at payroll expense. I'm not quite sure what category it would fall under, but that's what you're going to be setting up, is going to be following through. What kind of item is this? What does it do? Okay. All right. So taxes, based on the tax tracking type you chosen, QuickBooks automatically selects, okay, sure. So in this case, I'm just going to keep going next. So again, how is it calculated? Is it calculated based on the item, or is it based on hours? Okay, so it's going to probably be based on hours. But any way that you want to try to set it up, again, make sure you know the ins and outs of what your item that you're trying to set up. Okay, so again, based on hours, per pay. Okay, and then how much is it? Well, we don't know because it's based on the per pay. But in this case, this is the percentage. It's 1.36%. Okay, for those who were in my accounting class, you know what I'm talking about. Is there a limit for the workers' compensation? I don't actually know. Probably not. And you can click finish. So there you go. Now you have an item called workers' compensation, which is going to be a company contribution. So again, a company pays for that, not the employee. So it's not a deduction. It doesn't take away from the employee's paycheck, but it is part of the company's contribution for having employees in general. Okay, so again, if you wanted to go through this way, You can, because again, if you're just adding one item, you don't have to go through the interview again, right? Because then you're gonna have to click next, just to get to that section, right? Where this one, you could take an easy trip and just go towards the item that you want to create, and so on and so forth. Okay, so that's creating any additional items on this list. It's very standard, straightforward. It's very similar to everything that we've been doing, whether it's entering a new item, entering a new account. Same ordeal. You just go down to the bottom of the window, click on that drop-up menu, and click on new, and just go through the different windows that it goes through. Okay? So that's that there. Okay? So let's talk about the next section here, which is going to be employee defaults. Okay? So what are employee defaults? So here we are in the employee center. Okay? So as you can see, here you go. Katie Reynolds is here, right? If you click on her, there's all of her information. So that means the next time I put in a new employee, right? So let's go ahead and click on new employee. It's going to walk me through the same exact, just like how we had the vendor center and the vendors list, and as well as the customers, right? It gives you the same kind of criteria, right? What's their information, right? How do you going to pay them? So on and so forth. What taxes do they have to pay, and so on and so forth, right? In this case, right, it would be so much easier if we can have one of these pages filled out for us, okay? And in this case, we can, all right? So instead of having to fill out everyone, piece by piece, right, that's a lot of information that you need to know about a particular employee in order for you to set it up, right? That's just the price of having an employee, is that you need to fill in all their information. However, to make it more easier on us, we can also set employee defaults to make it that much easier for us to put in a new employee in with specific details already filled in for us. Now, how do I do that? Well, if I go up to the top here where it says manage employees, boom, you have change new employee defaults. So what are these employee defaults? This allows you to set up things so that every time you set up a new employee, it will have these things filled out in the payment section for you automatically. So for example, let's say my first person I put in is a salary-based earnings, right? That means the next person's going to have the same exact ordeal. They're going to have the same availabilities to be able to get a salary-based earnings. So that's what I want. And they can also get a salary vacation, right? And what is their pay rate, right? What is their hourly wage, or in this case, annual rate? So that means the next person is going to still also get $60,000, right? So I'm going to be setting this part up. What additional deductions and benefits do they get to receive? They also get the 401k deduction and the 401k match. And they also get the opportunity to take the medical insurance, right? Which is 4%, 2%, and of course $100 from their paycheck. Other things I could set up is going to be a payroll scheduler, right? So in this case, I don't have one right now. That's okay. I can set one up, okay? Now, what do I want to call this payroll setup, payroll period to be, okay? So in this case, that's exactly what you're doing. You're creating a schedule for when the next paycheck is available. So today is, what's today? Today is the 19th, right? So let's just say I want to make this one available. So here, what do I want to call this? Bi-weekly, weekly, monthly. So in this case, they all get semi-monthly payments. Okay? And then let's see. So the first one says, how often would you pay your employees on the schedule? Okay, so in this case, I would pay them every twice a month. So now it's asking me, Okay, so what's the criteria for the first paycheck? When does the payroll period start and when does it end? Okay, so in this case, paycheck date is going to be, paychecks day of the month is going to be the 16th, right? It's always the after the 15th, the 16th, it's going to be available for the payroll period to end on the 15th, right? Then the next one's going to be second paycheck is going to be for the month is going to be the first of every month, right? Because the payroll period is going to end on the last day of the month. Okay? And then when is the next paycheck due? So in this case, we're in the middle of May. So I'm going to say the next paycheck that's going to be available will be June 1st. Okay? And then for the next pay period to end date on May 31st. Okay? That's how you set up a payroll scheduler is I'm telling QuickBooks to do the math for me. Saying I'm going to be scheduling to make payments for this individual every twice a month. Meaning the payroll period is going to end on the first paycheck on the 15th to make the check available on the 16th. And here I'm also going to say on the very last day of the month, right, is going to produce me the first paycheck on the very first day of the next month. So in this case, and I even tell QuickBooks when the next paycheck is available. Okay? And I'm going to click OK. Okay. Wait, what did it say? Okay, your first paycheck day of the month must be before the second paycheck. Oh, okay. Whatever. So in this case, okay, I see what it means. The first, okay, I should switch them actually. First paycheck is going to be on the first, okay, which is going to end. Wait, no, that's not right. The first paycheck is going to be on the 16th. That's right. So let me see. So maybe I should switch this out then. Let's say my payroll period is going to end on the paycheck 16. And it's going to, the date is going to be May 16. Nope, I still have to, oh, okay. Okay, so in this case, okay, what did it say? The payment, the first paycheck date of the month must be before the second paycheck day of the month. Before. Okay, so maybe this one will be, I'll make it pay on the last day then. Okay, let's do this again. Okay, let's do June 1st for the dates to be the end of May. Okay, come on, go through. Okay, so I guess that means I have to match it as the first day. So in this case, let's do June 16, okay, to end on June 15. Okay, all right. Now it says, would you like QuickBooks Desktop to assign this payroll? Yes. Okay. So there you go. So that's what you have to do just to make the schedule work. All right. So then now it says, what class does this belong to? It depends. Are you employing your employees for specific locations, or are you going to have them work for the general location? That's up to you. Okay. Let's go ahead and set up my sick and vacation pay. So again, sick pay All right, let's see what it says up here. All right, sick pay. We don't offer sick pay, so we could skip that section, right? We only offer vacation to my salary age workers. So again, beginning of the year, okay? How many hours can be accrued at the beginning of the year? 0. Okay, a maximum of hours that they can do is 200. Reset hours every year. Yes. Okay. And then again, sick and vacation hours paid. Okay. Overtime. No overtime. Okay. So once that looks good, I click OK. So everything I've done so far looks like I'm setting up a lot of things, right? Okay, what about the payroll frequency? We already established it's semi-monthly, and I'm going to click OK. So that, I just set employee default. So that means the next time I go ahead and create a new employee, right? My payroll information, check it out, has filled in for me automatically. That means every time I add in my new employee, all I'm doing is I'm filling in all the information about them. The payroll portion is already set up. It's already set up to be paid semi-monthly. That means the next paycheck is June 15 or June 16, right? And then of course you got the wages that they can earn, right? And you also got the benefits and deductions that are going to be taken away from your paycheck. Okay? Automatically done for you. And you even have the sick and vacation pay already set up for you as well, right here. Okay? You get this many hours, okay? And up to date and all this information right here. Okay? So that is what an employee default can do. So that means the next time I put in my new employee, they could be a salary-based earnings, right? And they can go ahead and you could put in as many new employees with salary-based earnings right then and there. Now, what happens if the next person I've decided to put in here is going to be a hourly worker? Okay? Now, in this case, what I can do here is I can also revisit my employee defaults and make changes to them and say, okay, well, now the next set of new employees I put in here is going to be my hourly workers or my regular hourly workers, right? So I only offer regular hourly, okay? And let's say all of my employees are going to start with the amount of $24 an hour, okay? They're going to get the same benefits, right? They're going to get the same benefits of a 401k plan, okay? And they're going to get the same benefits of the medical insurance. They are also going to get paid the same days as well. So those are all set up. Now, of course, because I don't have hourly vacation, whatever I set up the vacation hours for will not affect this at all because I don't have the vacation item on here. Okay? And I can click OK. All right? So that's what you can do to make it that much more easier to enter in all your employees at the same time. Okay? All right? Now, once you've created an employee prior to the default settings, no, it cannot apply it to anybody that you put in before setting those defaults. So that means when you set those defaults, anybody that you put in new after will have those default settings. Okay? All right, make sure you are aware of that. Okay? Any questions in regards to employee defaults? Okay. All right. Last section of the day is to talk about, all right, guys, last couple sections, right? Is talking about what happens when you need to either fire an employee or let them go. And they're currently working, and right now it's June, right? They worked all the way up to June, and now it's time to let them go. What is the best way to be able to make sure that this person doesn't appear on the payroll list. So then I don't accidentally pay for somebody who doesn't work here. Okay? Now, just like how you are able to inactivate a customer, a vendor, you could also inactivate an employee. So right here, you can inactivate them, right? But if you choose to inactivate them, what happens is they still will appear on your payroll worksheet, because they're still technically, even though they're not active, they're not working for you, and they're hidden on the list, that doesn't take them off the payroll list, okay? You need to do one more step further than that, and that's where you're going to have to edit the information, and you have to fill out this extra information here for the release date. If you do not do this, right, that means the employee will still appear on your employee information. So it's very important that you set a release date, because once you've done that, QuickBooks is now going to be notified that this person doesn't work for you anymore. So therefore, they're not going to calculate the taxes, or they're not going to put them on the payroll period, because they don't work for you anymore. So that's very important that you need to know that when a employee ceases to exist and doesn't work for the company anymore, you don't delete their profile, because especially with taxes, right? If they work for you for just even for 1 month, you have to report that to the IRS, okay? And so therefore, you can't delete them, and you can inactivate them, but that's just only going to hide them on your list. It isn't going to take them off the list, okay? So that's what you have to do, is you have to fill in this release date to officially make it known to QuickBooks that this person no longer works for me, okay? All right, and then of course, let's see, last but not least, right? We talked about inactivating, and then I guess we kind of talked about creating a new payroll item. You can edit them too. So for any reasons that you have to make changes to them, maybe you don't use Merrill Lynch anymore for your 401k, you can change your payroll items at any given time, right? It's the same way that you're able to edit a an account, an item, and so on and so forth, right? And then so last section now is going to be talking about what kind of reports you can do for your employees. So in this case, what can you do? You could do an employee contact list. Okay, you can even run a payroll liabilities. You can even run the payments, right, for your employees. So let's see. If I go to my reports menu and click on employees and payroll, what you're going to see here is you can see your information on payroll summary. So how many paychecks have I written out? How many liabilities I owe right now, or how many, I could even look at how many payroll liabilities I've paid, right? So looking at all the payroll items, right? So all your federal taxes, all your state taxes, right? Those are your payroll liabilities, right? You can run a balance report to see how much you've collected so far, okay? And of course, you can even look at how much you've made payments to. You can even do an employee contact list. So again, for any reason that you need to contact all of your employees, right? Either it's via email or via cell phone contact, right? That's your means to be able to collect that information, okay? So again, those are what you can do for payroll, right? And your employees right here. Now, we'll talk more about payroll again in chapter 11. So next week on Monday, we'll go into more depth on what you can do when you purchase a payroll service, okay? So again, we just set up payroll for a manual payroll system, okay? Now, there's a huge difference, and I'm going to show you. when we dive into chapter 11 on Monday, right? How much it's so much more easier to be able to process payroll instantly by just clicking on the button to pay your employees, adjust their times accordingly, and simply pay. It will calculate all the federal taxes, all the state taxes based on whatever percentage they are, right? And it will automatically do that for you. Okay? And I'm going to show you also off the book, I'm going to show you what the difference is if you choose not to go through a payroll service, right? And let's say you want to manually calculate the payroll, okay? So that is for Monday, right? So that is it for chapter 10. Any questions in regards to setting up your payroll at all? Any questions? Yes.
So the default setup for new hires, we only can have one set of default, meaning we cannot have one setup for the salary employee and then we have another one for regular employee.
No. You can only do one default setting at a time, but the thing is like I've mentioned, right? When you set it up, you put all of your salary earnings employees in first, and then make changes to the default settings. So then the next group of people you're going to be entering in are all going to be hourly wages. Okay, but no, unfortunately, no. There's no profile that I can choose and select for this default settings. All right, any other questions? All right, let's go ahead and spend the next couple minutes here to go over the multiple choice questions. So your job is to select the best answers for each of the following. Okay, number 1. Okay, an easy and convenient way to process payroll in QuickBooks for employees on a different payroll schedule would be to
B as boy.
B as in boy is correct. Use the payroll schedule function in QuickBooks. So when we had that drop down menu, right? For the payroll scheduler. Now, the payroll scheduler doesn't really exist there, but I do sometimes I do tell my class that you're not looking at the payroll schedule there. When you are in your payroll center, which we'll talk about on the 11th, that is your payroll scheduler. Okay, that's where you get to see what paychecks are due, who it needs to get paid, and when they need to get paid. But right here, the payroll scheduler is referring to this section here where you can create as many payroll schedulers. So for instance, right, this one, the semi-monthly, is going to pay my employees for those who are on a semi-monthly payment. They're going to get paid on the 16th, and they're going to get paid on the 1st of the month. Whereas, let's say I do have the capabilities of having my hourly workers, right, that get paid every 2 weeks, I can set them on a schedule to say, well, their paycheck is due on the 19th, and then the next one's going to be due on the 5th of the month, right, every 2 weeks. So yes, you can, if you want to have two individuals to have two different pay schedules, right, one on this week and one on that week, right? You utilize the payroll scheduler to be able to to assign those specific employees to be paid on specific dates. Okay. All right, number 2. Okay, which of the following payroll periods is not an option in QuickBooks?
D as in dog.
D as in dog. Semi-annually. Yes. Right? Let me see. Obviously, yes, you can pay your employees every single day, right? Uber does it all the time where you can, after you finish your shift, you can collect your money at the end of the day, right? Yes, you can pay your employees every day. A common one, as we've seen before, is every 2 weeks. You get paid every 2 weeks. Now, quarterly payments, right? That's something that could be pushed, you know, a paycheck, get someone getting paid every 3 months might be kind of outrageous, right? But this could be someone that's like an executive or a CEO that gets, thousands of dollars per paycheck. That is something, okay, that will probably be the not the most likely, but that would probably be an option that is could be the most available. However, someone to get paid every 6 months, that is a little outrageous, right? There's nobody in the world who wants to get paid every 6 months. So semi-annually is going to definitely not be a payment option. Okay, remember, and of course you have annually. Now people are not going to be paid at the end of the year. They can be, right? So for example, I believe what is it? I believe the I believe professional sports, right? They get contracted for a big lump sum. They get paid at the end of the year after they finish their job, but they don't get paid during the year. But they, with sponsorships and things like that, they live comfortably. So in this case, an annual, but again, annually is usually used as a rate, okay, not an actual payment plan. Okay. Number 3, which payment items cannot be created in the payroll setup interview?
D.
D. You can create all of these items above during the payroll setup interview. Yes, because remember, if you have as many different types of benefits or things or deductions or any kind of means of compensation, you can create anything in the payroll setup. Okay, you don't have to go through the payroll setup, but it does help you basically walk through all the steps that you need to do in order to set up the item well. Okay, so in this case, commissions is a earnings. Bonus is also an earnings. Medical insurance is a deduction. Okay. Number 4, which is not an option when setting the accrual period for sick and vacation time. Which one is not an option?
A.
Okay, at the beginning of the year. So in this case, this is talking about when you're doing sick and vacation pay, right? Usually you have a time frame on it, right? To reset. Now this is the question is asking is not an option, right? Typically, most commonly, a lot of companies when it's a new year, they reset the whole vacation and sick pay, right? Sometimes it carries over to the next year, but most cases it restarts at the new year. Okay? So A is definitely an option that it can restart as. It can restart every beginning of the year. D like dog, every hour on paycheck.
B as in boy.
B as in boy, every month. Yes, that is not an option because you're not going to reset your vacation and sick pay every single month. Because that means anybody can take advantage of that and call in sick every single day and be like, "Oh wait, next month I'm good to go. I got another 80 hours I can claim." No. Yes, that is the answer is going to be you're not going to have the option to reset your vacation and sick time every month. Okay? So good. Number 5, okay? The payroll setup interview will not allow you to
D as dog.
add 2 employees with the exact same name. Yes. So again, you had to do your reading for this. So in this kind of case, right? Yes, you can have employees with the same name. Look at this for example, right? You look at Walmart. How many billion people is employed at Walmart? Okay? And what are the chances that you're going to have someone with the same exact name? Very likely, right? But for a smaller kind of business, less likely. Now again, you could have someone with a John Smith Jr., John Smith Sr., or John Smith the Third, John Smith the Fourth. It's very common that you're going to have people with the same name. Now, a way that you're able to enter them in is you can use their middle name to identify them. So again, right, George W. Bush, right, versus George H. Bush, right? That's how you can tell the difference between them, right? Or again, if it's father and son, right? One of them could be senior, one of them could be junior, one of them could be the first, the other one could be the second. So again, that could be a means. Now, what if they have the same exact name, but they are completely two different people, right? What if it's John S. Smith and you have another one with John S. Smith? You can use some kind of indication to say that maybe this is the first one, this is the second one, or you can just write out their middle name in the first name so you can differentiate between the two, because what are the chances of someone having the same exact first, middle, and last name? Okay? So again, it might be John Stephen Smith and the other one will be John S. Smith. I don't know. Some random S name, right? It's John Sam Smith. Okay? It could that if that's the case, then utilize the middle name and enter it either in part of the first name or you can put it in the middle initial if you'd like. I'm not quite sure if you can go very far in the middle initial, but at least if that's the case, you need to make some kind of differentiation between the two because QuickBooks would not allow two people with the same name. So you have to make some kind of inflection to be able to tell the difference between those two profiles. Okay. All right, number 6. You enter in the federal ID for your company. C, okay, in the company information window. Number 6 is C, in the company. Okay, so again, this is for tax purposes that you need to have a federal tax ID number, right? We talked about this, right? Because this, again, QuickBooks, the reason why they ask you for a tax ID number is to, in fact, be able to collect these federal taxes, okay? But it's also a way to identify your company apart from other companies. But this is mostly, it's geared towards creating an account for you to collect the federal tax money that they need to get from your company. So that's what they're using this tax ID for. Now, where do you put this in? You could put it in through the interview, or if you go to the company menu, there is the company information on there. You click on it and you'll be able to edit the information on the company profile. Okay? Number 7, use a payroll deduction item, okay, to track medical insurance cost when letter A is correct, okay? When the employee pays part or all of the cost. Yes. Okay. Again, if the company pays for it, then it doesn't even then you don't even charge your employee anything. It's not a deduction to their paycheck. Okay? Because if the company's going to pay for all of it, you don't even need to put it on their paycheck. Number 8. Okay, which of the following would QuickBooks exclude from taxable earnings when calculating federal withholdings?
D as in dog.
D as in dog is correct, right? Overtime earnings. Now, I don't know too much about that rule, about tax exempting that. Okay? But if that's the case, if they work more than what their when they exceed the maximum hours that a person can work, and it goes into overtime. I'm not quite sure if that is something that would be excluded as a taxable item. I'm not. I would assume because you're generating more income, you'd be taxed for this overtime. So again, I'm not the tax accountant, so in this case, that's what the book says. The book says that overtime is going to be one of those earnings that is going to be considered an exclusion to the taxable federal income tax withholdings. Okay. Number 9. Why are the 2 Medicare and 2 Social Security items in the payroll items list? So why are there 2 of them?
C as Charlie.
C as in Charlie for number 9. Okay, good, right? Because QuickBooks is going to track what the employee and what the employer portions separately. Yes. So again, when you actually calculate, when we actually talk about on Monday, well, how to do manual payroll, you're going to learn that, especially for federal, right? It is the employee and the employer's responsibility to put in money into the Social Security and Medicare. So, for instance, right, whatever the employee puts in their Social Security and Medicare, they can't choose how much, right? It's already a designated percentage. That means the company must match them 100% because that's the agreement of the United States, right? If you choose to work in America, this is the retirement plan and the for people to work to this point to receive benefits for when they retire. All right, that's the rule here in America. So it's a company policy, or it's a federal policy that all companies must abide by, is that if an employee works for you, you have to pay into their Social Security and Medicare. Okay? All right, so yes, and QuickBooks must keep track of it as separately, right? Because you have one for company and you have one for the employee. Number 10. Which of the following is not a feature in QuickBooks Standard Payroll Services? So I didn't talk about this because we don't talk about this until chapter 11. Number 10.
D.
D as in dog says automatically calculates the federal, state, and some local taxes using the tax table supplied through the QuickBooks Standard Payroll Services. Number 10. The book disagrees with that answer because it's not a feature. Because that for sure is a feature, right? If you heard me talk earlier, I did mention that a payroll service will help you automatically calculate everything for you, including all federal and state taxes for you. And all you have to do is just click OK. All right? You don't have to do any of the calculations. You don't need to know any of the percentages because QuickBooks will do it for you automatically. That's through a payroll service. Now the question is asking which feature is not a feature. So D is a feature. Okay, I guess we can go through these answers. So A tracks tracks individual employees for hours worked and gross pay. Yes, right? You do that through the timesheets, and it gets automatically converted when you click on Pay Employees. So in this case, yes, that is a feature that is a part of the QuickBooks payroll service. B, writes and prints paychecks on standard checks. Yes, it does write the checks, and yes, it does print the checks, but the standard checks is something that you must buy. So yes, it does do that, right? You can have the payroll services either choose. You have two options, right? You can either send it forward to the bank to do it for you, or you can print it right then and there. C says calculate and then electronically remit federal payment tax table tax payroll tax liabilities using the EFTPS. Now, the EFTPS is going to be something that you have to set up. So in this case, is that part of the payroll services? No. They don't the payroll service is not the EFTPS. Okay? So in this case, C would be the answer. It will not do that, okay? Because you would have to manually pay your payroll liabilities by setting up that payroll service, right? That payroll tax payment service, right? You would have to manually set that up and by logging online and being able to do that and transferring the money that way. Okay? Number 11, QuickBooks uses payroll items to
D as dog.
D, all of the above is correct. It does accumulate payroll liabilities, okay? And it also tracks each different kind of compensations. Yeah, so again, hourly, salary, overtime. Yeah, it keeps track of them separately. And if also letter C, it defines the relationship between items that you put on your paychecks and the chart of accounts. Yes, again, um, payroll items is a completely separate section for you to create all the benefits, all the deductions for your employees, right? But remember, we also link them to the appropriate accounts that are associating with those items. Okay, so it gives a defined relationship, right? For every payroll item must be linked to some payroll account. So yes, it does all of the above. Number 12. If you no longer want an employee to show up on the select employees to pay list,
C.
you need to enter in a release date in the employee's record. Yes, remember, inactivating them isn't going to do anything. Number 13. Which of the following payroll options does not require you to sign up for a Intuit payroll service?
A.
A, manual payroll, which we're going to get to take a look at on Monday. I'm going to show you how much more difficult it is, or not difficult, but definitely more tedious work it is to do a manual payroll system than to pay the price for an automated system to do it for you. Okay? So that we call that manual payroll versus automatic payroll or automated payroll. Okay. Number 14, last question of the day. To set up the local taxes for employees that are not supported by QuickBooks, to set up local taxes for employees that are not supported by QuickBooks.
Is that D as dog?
D as in dog is going to be the correct answer. That's what the book says, either A or B. So it's going to be choosing the other tab underneath the tax defaults. Okay, and then or B, you're going to set up the new payroll item and then select other tax. So again, for any reason that you have any local taxes that you're subject to pay, you're going to have to set up the item account, and then you're going to have to make sure it's an other tax, right? And that's going to go on the employee's check. All right. All right. That is it for chapter 10. Okay?